Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm a KKM Financial. Well, we're seeing the VIX cash staircase lower today and really staircase lower over the past 2 weeks as we are now at the low end of the range for the past 2 weeks, right around 2140 currently. With the SPX coming off the lower bound. And I also want to point out when you look at realized volatility week over week, basically unchanged. So what's really interesting here is that the at-the-money straddle week over week has come in quite a bit from a 21 reading of an implied level down to a 17.5, yet the VIX cash is at 21.5. So that implied that the skew factor has shifted higher week over week, which it has, from 136 to basically 140. So that means demand for out-of-the-money puts in the SPX relative to demand for at-the-money options has increased week over week. Looking at the futures markets headed into expiration week, we're seeing a very steep term structure or roll market, better than $3 currently between March and April, yet that March future still holding about $1.30 in premium relative to the cash. So an interesting dynamic as we move into expiration week. April-May futures roll market has already started to widen out. It's from 90 cents to $1.40 week over week. So we're seeing that play out as it's moving towards the front month future roll market. Futures curve in general, very steep through basically June now, and then July through October, very flat. VVIX, measure implied volatility in the VIX options, 112. That's the lower end of the recent range. And when you look at the activity in the options headed into expiration week, lots of out-of-the-money activity in the options in March. Calls as well as puts. More so on the put side, though, which is interesting. The 23s, well, I guess now in the money. 22s and 21s are all very, very active here as we move towards expiration. And then some out-of-the-money put activity also in April. Next week, I want to point out, interest rates are going to continue to probably drive the volatility structure as we see the 10-year pushing up to better than one-year highs. Fed announcement next week, and then highlighted by expiration as well.